Welcome back, champions. Another mind-boggling stock news. Crocs Incorporated, CROX, is well-placed for long-term growth, backed by its business strategy and key initiatives, which are expected to deliver sustainable growth. Crocs witnesses favorable trends supported by solid consumer demand across the Crocs and Hated brands, accompanied by effective pricing actions and lower freight costs. Strong demand trends led to impressive results in the first quarter of 2024, which marked the 16th consecutive quarter of earnings beat. Additionally, the company is confident about its strategies and investments, which are expected to drive long-term market share gains. Shares of this company have risen 24.7% in the past year against the industry's 7.7% decline. The leading footwear company also compared favorably with the sector and the S&P 500's growth of 2.5% and 23.2%, respectively. The consensus estimate for Crocs' current financial year sales and earnings indicates growth of 4.4% and 5.6%, respectively, from the year-ago reported numbers. Looking at the progress, Crocs has been witnessing incredible success with its diverse collaborations and partnerships. The recent collaboration with the luxury brand Simone Rocha solidifies its brand positioning in the high-end market. The launch of Echo Storm in the direct-to-consumer channel and partnerships with Foot Locker and JD Sports are on track and performing well. The company has demonstrated growth across different markets, driven by iconic brands like Toy Story and Hello Kitty and emerging ones like Clot. Crocs' long-term targets include generating revenues of more than $5 billion, representing a 5-year compounded annual growth rate, CAGR, of more than 17% by 2026. It expects to attain the revenue target, driven by strong digital sales, improved market share for sandals, growth in Asia, and innovative products and marketing. Management expects 4 times revenue growth in sandals by 2026. Additionally, the company sees long-term opportunities in Asia, primarily in China, the second-largest footwear market in the world. Management expects revenue growth in Asia to witness a CAGR of 25% and represent 24% of total revenues in 2026. Crocs targets at least 50% of the total revenues from digital channels by the end of 2026. Driven by strong revenue growth, CROX anticipates delivering improved profitability and cash flows by the end of 2026. It expects the adjusted operating margin to be more than 26% and annual free cash flow above $1 billion by the end of 2026. For 2024, Crocs anticipates revenue growth of 3 to 5% from the year earlier levels at constant currency. Revenues are expected to rise 7 to 9% for the Crocs brand and decline 8 to 10% for the Hated brand. CROX expects the gross margin to improve from a year ago at the enterprise level for 2024, with gross margin growth across the Crocs and Hated brands. It anticipates an adjusted operating margin of 25% for 2024, with adjusted earnings per share of $12.25 to $12.73. Would you invest in this stock? Let us know in the comments.